All right, so this is day one, recording just my live sessions to keep myself accountable and just share my thoughts on the market. So I just went to the bathroom and mapped out this range here, which was a displacement to the upside. And we came down perfectly to equilibrium and went higher. So what I'm looking at now is this as a bullish order block. And what I'm going to do is just make this a dotted line, get rid of the fib. All right. So this is a 5-minute bullish order block. Now, keep in mind that we just barely poked above the buy side here. So it may want to run potentially up into these highs. So let's just outline that. I'm overall bearish, but we need a breakdown in market structure before looking for a short. So pre 9:30 open, I'm more inclined to look for the buy side to be drawn to. So I'm looking here. And I'm looking here. Now that's for buy side. Now we're trading into the bullish order block now. I don't want to go long just yet because one of the things I'm looking at is we've already given back this entire push up. So this is potentially the Judas and it could seek lower prices from here. And one of the key things in trading is you don't want to rush into an entry. So you can also see we've got a 1-minute bullish order block here as well inside of the 5-minute. We see how we're giving back all this range here. So this offered 711 to 776, so over 60 handles was offered on the upside, and it's given it all back for the most part now. So this could be the high of the session in place for a sell-off lower. So let's go ahead and map out the consequent encroachment of this wick. And we want to see how price behaves at that level, which is 722. And let's just make this black so we can delineate the difference between the EQ, which is, we'll just mark that out here. And again, that's EQ of this displacement range to the upside. So just for the sake of having it in the recording, body low to body high, because this candle here shifted market structure, run on internal sell stops, failure to break the low, perfect redelivery to equilibrium. So what I'm saying is that's a perfect long entry. All right, so let's see how we behave around consequent encroachment. Now, one thing I'm looking at is just based on this pullback already off of running the buy stops here, even though it was shallow, this is an overall higher time frame bearish market. So one of the things that I've got my eye on now is potentially looking at these fair value gaps as an area to go short, because if we close below this consequent encroachment, I would consider that a shift in market structure, and I'd be looking for a run below this low and then ultimately below these relative equal lows down here. So if we draw this BISI, this should now act as an inversion fair value gap. And it should repel price lower if it is indeed an inversion fair value gap. So we're going to just make this visible only on the 1 minute so we don't get confused. And then shifting back up to a 5 minute, you can see this bullish order block is basically invalid if we close entirely through it. So we've got 1 minute, 25 seconds left in the candle close. Again, if we close below the 5 minute order block levels, my attention goes to sell side down here. So we can go ahead and map that out. And I can just tell right now from looking at it, this is a pretty weak market. One thing I want to show you guys real quick is if we take a look at the economic calendar, clearly there was a good buy setup here off of the equilibrium, which was due to the 8:30 news, explains the push up. We also have pending home sales at 10, so that could offer some volatility as well. But one thing I don't like in terms of a clear market conditions for the day is we have Powell speaking at 4 p.m., basically at market close. So one of the things I'm factoring into my analysis today is the potential to have a relatively unfavorable trading conditions. And the reason that I say that is due to the speaker at 4 p.m. Okay, so sorry not to get sidetracked, but you can see we've closed entirely below that 5 minute order block. So that's invalid at this point. Those two buy stop levels are not valid anymore now that we've came all the way back in the range. So we've cleared buy side and we've had a shift in market structure. Now, it doesn't necessarily have to revisit this inversion fair value gap. I would like that in terms of a premium level to go short, but I would also be fine shorting directly at this bearish order block here. And what we'll do is I'll go ahead and map out a short position. The only thing with this position is I will have to have a bit wider stop because my stop is going to have to be essentially up here. But I am going to just make this a 1-to-1. So I'll keep my stop here, which is just either at or above the consequent encroachment of this wick. And I'm fine with that. And again, since we've already traded back into the inversion fair value gap here, we might not need to revisit it. So what I'm going to do is I'm just going to set a limit order. One contract, risking 890 to gain 890. Sell, and if the market can offer that to me, I'll take the short. One other thing is notice the small little sibby we've left here. Now, the market could be weak and just run below here without me. Now, if that's the case, I'm going to have to get rid of this sell limit and I'll have to wait for something else to set up. Obviously, you can see, like, even though this was a long setup, you have to be very nimble and exit your positions, or at least close partials at buy stops when they're ran out, and then trail your stop order up, because, I mean, from 8:30 to 8:44, it delivers 60 handles and then gives it all back. So definitely something you want to consider when trading. Notice how consequent encroachment of this wick overlaps with the SIBI. I do like that. Keep in mind we also have a small little SIBI here as well, but we have to factor in that price could want to trade back up into this one. Now an ultra precise entry will be off of the bearish order block here where you can see my limit order. However, if we're showing continued signs of weakness and I have to adjust the limit order, I can go ahead and adjust it to this fair value gap. Both are fair. Yeah, doesn't seem like we're going to get our entry on, and that's okay. I mean, we still have plenty of time in the session. It's only 8:30. We're actually about to enter the 850 macro in about 1 minute, actually 55 seconds. And typically, the 850, 950, and 1050 macros do either like to return to an inefficiency or seek some element of liquidity. So we will obviously see one of two things happen. We'll return to an inefficiency, which will be here, or we will outright seek the liquidity below here. Just for visual purposes, I'll delete this after, but fair value gap there. And whoops, fair value gap here as well. So notice how weak the market is. It's having a hard time getting back up into these levels. So remember, if we get below this level without hitting my entry, I'm going to close this limit order and I have to move to the sidelines until something else clear sets up. All right, 850 macro has started. Again, we're going to either run this liquidity, which that looks like what we're going to do. There it goes. All right, sell limit order has been canceled, sell sign has been ran, and we need to look for this level next. And we can remove that. We can remove that. We can remove that, and we'll keep that because that's one of our key indicator levels. So again, you've got the inversion fair value gap. Price closed below it, retested it here at 841. That price level is 737, and now we're trading at 678. So again, 60 handles offered on the upside, 60 handles offered on the downside. No tradable opportunities offered for me personally, but always good to see. So this is our range, high to low. Now, for an ideal morning session, we should start expanding below this low. If we hold this range, it's a little bit more unfavorable for the day because that means we could go into a seek and destroy market profile. We've got this inefficiency down here below us, so I do still favor the sell side. I just don't like how we're leaving these equal lows and equal highs. If we bounce back and forth in this range, it's going to be an unfavorable AM session, which will make me reluctant to execute any positions. And the level that we're currently trading at, actually, so you guys know, this blue box is an hourly busy right here. So look at what the hourly candle has done so far. We've opened, ran all the way back up, and now we're trading back at the opening price inside of this hourly BISI. One thing we can do is map out the range of this swing. So you got the equilibrium level here, so anything above it is going to be premium. Again, it's more favorable to have been able to get on a short on board up here for a run below this low. It's still likely that they're going to take these equal lows, but I'm just a bit more hesitant this morning because of a potential seek and destroy profile. There is enough up here though for me to still want to sell short. So let me go ahead and get that set up. And since we've already used this inversion fair value gap, I'm going to use that as a stop. And that looks like I need to be quick because we're moving. So it'll be $370 of risk for $830 worth of profit. And if we take a look, we've got one PD array, two PD arrays, three PD arrays. So I'm just above the bear shoulder block here. We should have enough to hold price below with this consequent encroachment and this premium fair value gap inside of probably the OTE levels. Just check them out just to be sure. Yeah, you can see sweet spot, and then we've got 79%. So my limit order is basically right at the sweet spot level. We may or may not get filled. I mean, I'm not married to it either way. Not sure if you guys can see it, but we are trading in a small little BISI right there. Notice the retest of that equilibrium. Looks like a weak market though. If we didn't have a speaker at 4 p.m., I would take a short on the retest of this here if we can touch that level into here, which would be, okay, so I would, if again there's no speaker, I would short it right now. 701, and I would take that down into 677. So 23 handles. I'm not willing to take that with speaker later on today. I'm being a little bit more demanding on my entries this morning. Notice the reaction once we've retested that level. I already offered about 13 handles. and that's in one candle. Clean up the charts a little bit, get rid of this. We've already got the limit set. Bearish order block, we know it's here. I'm going to delete that. I really don't need the fib on here either, but I'm going to just take that off for keeping things simple. But we know that the high formed is at equilibrium. Take a look at some of the other time frames. I like how the limit order is right at the start of a 5-minute fair value gap. Looks like we're just weak. I don't think I'm going to get my entry at 719. Probably be much better setups at 10 a.m. anyway. Cycling through some of the other pairs. Dow looks really weak too. One of the reasons I'm considering a seek and destroy profile as well is if you just notice the way that price is behaving, we're not having much follow through. And that's usually problematic for a high probability environment. There's nothing wrong with the short level, but I'm just trying to factor in all possibilities. I don't necessarily see price how can I draw this? Thought there was a little arrow. Whatever, I guess it doesn't matter. But I don't necessarily see price getting above this fair value gap. If it did, and most likely will act as an inversion fair value gap to send price higher back up into these highs, which again is problematic for a high probability session. So I'm willing to stick to my short bias and see if we can fill my limit order and then take us below these equal lows. I think that's a higher likelihood than coming all the way back up for the highs first. If you just take a look at like some of the ranges, we're at 720 down to 677, so about 50 handles, and then 720 to 70s also about 50 handles. So it's kind of one of those 50-50 type of mornings. Keep in mind we are ahead of the 9:30 open, so that's also not 100% ideal. Looks like we might get a fill. Hopefully you can also see like why I was more reluctant to take the short here on the retest, even though it offered 10 handles quickly. In this type of environment, you got to be very nimble, take your profits quick, you know, have a certain type of model that you're operating within. For me, basically operating within like an intraday scalping type of model. So we'll see what we get. Let's see if we get a fill on this run up here. I'm going to remove consequent encroachment of that wick. We don't need it anymore. We know that it's basically overlapping with this fair value gap. So we have multiple things converging or confluence at the 720 level. We've got a fair value gap. We've got consequent encroachment of the wick. We've got a bearish order block. We've got essentially over a 2R setup. So all things are a go. The only factor of concern is we're trading in between two levels. So we are in essence in about a 50-50 type of market environment. No, this should act as a bullish order block to send us up into this level. So we've got the open and we've got the high. So let's see if that's enough to push us up into here. And, you know, some of you could also take this as a trade. That's a run from 705 to 720. It's 15 handles. All right, there's our fill. Nice reaction from the bullish order block. Now, we don't want to see price close above this fair value gap, right? It can wick in here, it can poke outside of it, it can tap into the bearish order block, but it cannot close above this pink box. And remember, that's also a 5-minute civvy that we've got there. Yeah, I don't really like the structure that we're getting though. cutting it here. Only because we got the retest of that. Not bad. We're ahead of the open. It's about 15 handles. 720 to, or it's really about 20 handles. Now this should act as a breaker. And that should also send price lower. Again, guys, I just have to be extremely nimble today with the speaker at 4 p.m. It's a bit more of a higher risk environment. So, and this is my TopStep account here. So I do have a different drawdown limitation. I've got a few accounts, so I've also got this trade running on a FTMO account as well right now, which I can show you guys that real quick. So same entry, but I'm going to hold it on that account. I have obviously different drawdown, drawdown rules with the FTMO account. I've also got a personal account over here with AMP, but I only trade this one during the 10 to 11 hour. I don't allow myself to trade this one any earlier. So that is the civvy that we just used as an entry. And you can see like the market hasn't even made a huge move away, but we were still able to extract just over $300 on the TopStep account. So that's not bad. Small little fair value gap that we got left inside of this breaker. Beautiful reaction though from our entry so far, so I'll throw that back up here. And you can see, guys, I was only in for 2 minutes. Entry at 9:06, out at 9:08, so yeah, 2 minutes. And that's 7:19 and a quarter to 7:05, so 16 handles. Or sorry, 15 handles. Quick, easy base hit. Don't want to have my account overexposed. And it's also the last week of the month. So we could go into like a range bound or retracement type of environment. So not willing to bet the farm or hold for full targets. But I will take a quick 15 handles out of the market. Not bad for 2 minutes of work. And we're currently floating about 20 handles in profit on the FTMO account here. Again, same entry. You know, I think the targets will be met down here, which will be a 2-hour trade, risking 1%. 967 for a gain of 1900. So we're currently trading inside of this small little bissy, so we'll see how price behaves there. I do like the fact that we've given up the bullish order block here, so we can get rid of that. Keep in mind we have this bearish breaker here, so price could want to gravitate back into that, or as far as poking into that little fair value gap that rests inside of it, which We should be able to see those levels. Right. So we got a 1 minute fair value gap in the form of a SIBI overlapping with a bearish breaker block at the point in which price sold off from our SIBI here. So this basically what I'm saying is this is another pyramid opportunity for a short. I will not be taking it on TopStep account, and I will most likely not be taking it on any other account as well, as I'm already in the position on FTMO. I cannot trade my personal account until 10. So this is really all I got to work with is the FTMO account. And again, we always run the risk of simply holding these lows and holding these highs because we have not left this range yet. But just because we're inside the range does not mean there isn't opportunities. Now, you have to wait for them. As you've seen, we waited for this entry. When it was presented to us, we took it and we wrote it for 15 handles, right? We don't need the full target. All right, let's see how we act here. Getting back to this breaker and the 1 minute fair value gap. I'd like to see a wick in it and then sharp rejection lower. That is ideal. Small little volume imbalance we just left here. I don't know if you guys can see that. Now, if we were bullish, price would tap this and then send it higher, but I want to see this level be rejected and I want to see price trade through it. So see how we just tapped it? That would be a bullish indication where you would go long if you're in a bullish environment. So this is nice. This is what we want. Trades into the breaker. We're pulling down. Now, this is even more favorable if we close back below this low. And I'm going to get rid of these lines on the volume imbalance. We don't need those. All right, look at that cap down. Nice. Now let's see if we can get a close below here. Small little volume imbalance here as well. We want to see price cut through those. We don't want to see it have any sensitivity to send price higher. See, we don't want to see that. We're also trading back in this little tiny fair value gap here as well. It's pretty crazy when you study price because, I mean, you can see how everything is just moving back and forth from inefficiency to liquidity to inefficiency to liquidity to inefficiency to liquidity. And we're going to get rid of this 1 minute fair value gap as well. We don't need that. I like to keep my charts as clean as possible. The more cluttered they are, the more impulsive and scatterbrained you can feel. Even if you look at my MetaTrader 4 charts, I mean, you can see like I've got a couple of reference points. Like I've got the midnight open line. This here is a daily level, daily bullish order block open, which we're now below. And then I've got these two fair value gaps within the range that we're trading in just to keep things permissible to be able to see what we're looking at. So you want to, that's just a reminder to keep your charts clean. All right. So this is looking pretty solid. We want to see again a close below this low that is beneficial for a continuation into these lows. Nice. All right, I've just closed my position on the FTMO account as well, lock in some profit ahead of the open. I do like to typically do that. Trading during the opening range can get a bit challenging. You have a lot of runs back and forth, and we can easily just come back above this high, back into the inversion fair value gap at 9:30 open. So I'm taking profits early, anticipating that we could hold this range ahead of the open. So just for keeping things transparent, I will show you guys here. So this is the trade off of this fair value gap. Right, took the short, and then I just exited here on a run back below this low. And if we look at how many handles, 25 handles, 1,145 bucks. So not bad for pre-market, not bad at all. So now we wait. There's no stress, no attachment, and we just wait and see what the market does. The next permissible opportunity for me to take a trade would be the first macro, which is 30 minutes from now, starting at 9:50. Up until that point, I will not execute on any trade, no matter what the market does, no matter what it looks like is setting up. I will wait, and I know that there will be an opportunity some point between 9:50 and 11 a.m. Now, will it be an opportunity that I'm able to get on board with? I don't know. But I know that there will be some form of opportunity. Now, on a day like this, where we have a speaker later in the afternoon, I've already locked in profit on the day. I don't have the need or sensation to take a trade, right? Because I've done it. So, and it's not like you need big moves, right? And that's something to remember. And this is mainly for myself because, you know, sometimes I forget and I tend to take so many trades and all this stuff. And, you know, a lot of times it does more harm than good. But, you know, in this recording, we waited. Price came almost to the liquidity. We took this one. That's initially where we were looking to short back up here. But then we had to wait for price. And we set a limit order here. Price tagged us in. Sold off. We were able to collect 15 handles. And then we mapped out a bearish breaker here, right at the 709 level. And it's offered so far 20 handles. So that's another tradable opportunity that's been offered. We've just now traded back into this 1 minute fair value gap, which should act as an inversion fair value gap to run the liquidity here. So that's another setup from 695 to 677, another 20 handles. Obviously you can see the highest probability setup, as I mentioned earlier in the recording, was this one because it's a premium fair value gap of this range. And this is kind of some range theory insights. But if we map out the body to body of this range, meaning the run that took us below this low, we can see that we're above the 50% level. So there's this fair value gap and there's this fair value gap. What's a higher probability? Obviously the higher one, because we know that it should have more sensitivity. So you can see price initially trades into this one. We do get a little bit of a pullback, but ultimately it has to come back up to this one and we get a sharper rejection. So I always elect to go with the higher fair value gap, which typically means I don't use the one that is right at equilibrium. I like to use the ones that are overlapping with the 70.5 and the 79% levels. And those two levels are very, very sensitive if you're trading the right range. So another tradable opportunity, trade it back into the inversion fair value gap. So I'm mentioning all this so you guys can see, and also for me to, when I refer back to this video, like there's so many opportunities. Like you don't have to rush, you don't have to force a trade. When a move is unfolding, as long as you know the draw, which again, these relative equal lows, that is what we're seeing as the draw. Therefore, there's a short entry here on this fair value gap, retest of equilibrium, offers some movement. There is a short here, offers nice movement. There's a short here that's offered nice movement. There's a short here off of this inversion fair value gap, which was a previous BISI that we used here. Come back up into the breaker, got below it, inversion. Now we're selling off. And this is kind of what I anticipated ahead of the open. So 5 minutes until the open, we're bouncing back and forth inside of this blue box, which again, if you guys remember, that is this hourly BISI. So we've just closed inside of it with the previous hourly candle. It looks like we're about to get below it, but just want to consider that. Look at the equal highs, equal lows. We're just kind of hanging out, right? No real significant direction one way or the other. And the reason for me obviously executing or closing the orders, I should say, is we could very well just hang out in this range. So I wanted to collapse my entry. So again, this is the only trade I took. I went short here and I collapsed the position on the retest of the BISI, which is also a bullish order block here. So even though it's delivered another 20 handles or so since I got out, I don't have any fear or greed or, feel like I missed out because I've already locked in profit, right? And it's ahead of the open. So it's not the highest probability time for me to be trading, right? Now, if we're in the 10 a.m. hour, that's a different story, right? I could hold the move for 30, 40, 50 handles. But there will be a higher probability setup because of the fact that the opening range will already be in place. Everything we've seen and done so far is ahead of the opening range even forming, which means you want to be a lot more nimble in your positions. One thing to remember is even though we've came all the way back down here, we left these relative equal highs. So it may want to revisit that later today or during this session, right? And typically on a day like today where we have a speaker at 4 p.m., the market will go range bound for the majority of the day and then 4 p.m. have a whipsaw event back and forth, clearing both sides of the board. And that is not something I want to be trapped inside of. These are days where historically they've stressed me the fuck out. And I feel like I've exerted a lot of mental bandwidth and energy. And so I came in today with no expectation whatsoever. I started the recording. I mapped out one live execution and I executed on both a TopStep and FTMO account. TopStep account, we got 15 handles, one contract. And FTMO account, we got 25 handles, so an additional 10. And that was about 1.1%. 100K account, $1,100 profit. TopStep account, 100K account, we made 300 and something bucks. But the way that I look at that is, I only have a $3,000 max drawdown. So 300 bucks to me is technically 10% of the 3K that I'm allotted to lose. So that's a win. And there's no time limit or anything with this account. So same thing with FTMO. I'm just taking it slow. The goal is to get these accounts funded, and then when they're funded, I will be a little bit more selective in which ones I trade when and stuff like that. But haven't really figured out exactly how I want to do that yet in terms of, do I want to link them to a trade copier or what? But I definitely don't want to manage multiple accounts. It's not a big deal if I'm doing two like this. Like I can take the trade on TradingView and also set a limit order on MetaTrader. Okay, so look here, we've got the 930 open. Again, we're still holding these equal lows. Let's see if we take it right here at the open. Now, what would be really interesting is if they continue to leave the equal lows in place, send it all the way back up into this inversion fair value gap, and then take it lower. Okay, there it goes. Equal lows are taken. Nice. Always love seeing that. So again, look how many times this inversion fair value gap, this 1 minute BISI here, it closed below it on this candle here. And then we used it once, twice, 3, 4 times. So any of those are opportunities. Now what I want to see here is a retest of this and then continuation lower. This should act as a bearish shoulder block. If this is an overall bearish market, we're going to see lower prices on the day. This should act as a bearish order block. And you can see why I wanted to be out ahead of the opening range. Even though targets were delivered, and sure, we could have made an additional, whatever it was, 500 bucks or so. It's not worth it to me when you can get whipsawing type of events, or it takes a lot longer for your orders to fill during the open as well, because there's so many people flooding the market. So that 10 a.m. hour is just the real sweet spot, if you ask me. All right, look at that. Whoa. So we used it as a bearish order block, and prices being sent lower. Beautiful. We love to see that. I don't know about you guys, but I don't want to be a part of the opening range doing all that mess. I am actually going to turn on TopStep TV. I want to hear what the chatter is. I'm not looking for them for trade advice. Trust me on that. I've been paying attention the past couple days, and my analysis is typically the opposite of what they're looking at, so it's pretty funny. Usually I'm making money and they're losing it. All right, so look at this. Back above this. This should now act as an inversion fair value gap to send us higher again. This is how you can flip these fair value gaps back and forth. Look how we return back to breaker block, fair value gap. Beautiful. Just noting this SIBI we got here. Likely gonna send price lower. You can see how we've had a lot of back and forth around these levels up in here. So you got to be very nimble, like I said. I could unmute this so you guys can hear it too. I just don't know how valuable it will be. I don't even really listen. I just kind of like, it's interesting to hear what they're doing. A lot of times it's fun to fade them. You can also take a look at their chat and usually get a little sentiment reading. Take a look at what's popping off on Twitter. 10 minutes until the 9:50 macro. And I will see if anything sets up for us. The 9:50 macro. I'm going to take off the sell side liquidity here because obviously we're trading below it. You know what? I'll actually keep it on because it'll be interesting for you guys to see if we hang around this level and this becomes the session low and then we trade it all the way back up to 776. So I don't know how likely that is. I mean, we do have a lot of range down here that we can go fill in, but it would be interesting to see because we are kind of working that level, failing to break lower. But we should really start to get some expansion in one direction or the other come 9:50 macro. Also taking a look at the regular trading hours, you can see that we've got a big gap today. So that's from 770s to 70s. So that's 70 handles. So we might want to trade back up, fill in this gap. So that would take us back up into these levels. And it looks like that might be what they're going to do, folks. So that will be pretty interesting. And it's so funny because I almost have a different objective view when recording myself because I can put the thoughts together in a better way to where I know when and what I should be doing. And like right now, I can forecast that it looks like they're going to want to hold this 677 level as a potential AM session low and then work higher to fill in some of the new day opening gap here, which is again inside of that hourly busy. So there's a lot of interesting stuff going on, but obviously that could all change if we get big displacement below these lows. And what would big displacement look like? It would be something along the lines of like big down candles, kind of like this. Sorry guys, I just burped in the mic. Forgot I had the mic on. Yeah, I think we're gonna make this higher play. I think that is what they're doing. Just makes the most sense. Go clear all the people out that were short. Look at that, guys. We're back up in this range and we've closed above this. Now watch this. This is going to act as an inversion fair value gap to send price higher. Look at that. You see the retest? Now it's going to take us up here. Now, even though this is in the permitted time that I can start trading, like my personal account, for example, because it's the 950 macro, you can see how we've still managed to pretty much hold the range. Like we trade outside of it, but then we're back in it. So again, I think the likely play is to take us up into the 776s, but not willing to put on risk. But this candle and then what was just offered right there are both long entry opportunities. Notice how we also created a BISI at that same level. I'm gonna get rid of this bearish breaker block. Actually, let me delete this and take a screenshot real quick. I'm gonna need that for my journal. Get rid of the bearish breaker block. Equilibrium, we don't really need that anymore. Don't need this, don't need this. And we're watching this as an inversion fair value gap. See if we can get back above this one or not. Could also be viewed as a run on internal range buy stops here to send it lower again, but since we already cleared the sell side and we've got these equal highs, I think we're going to gravitate up to that. 3 minutes until we've got a medium impact pending home sales news event. Quick check at the dollar. All right, should be interesting in 2 minutes. All right, now one of the things that we're looking at, like I mentioned earlier, is a regular trading hour. See how we've come all the way back up into this gap. Complete closure will take us into 767s, and then 10 handles above that will take us above the buy stops. So let's see what we get. News in 1 minute, 10 seconds. All right, news is out. Just in case you guys were wondering, yes, I did execute the long right here. And that was a 25 handle run from here to here. Or sorry, 30 handle run. Only trade I've taken on this account, profit of 500. Target is same as what we've been looking at, which is this high up here, which is a different price than the futures market because this is obviously the indexes or indices. But again, I'm overall bearish, so any longs that I take, I want to be very quick in and out. And if you look, I wanted to collapse it in case we get any rejection from this tiny little level. You could see that I barely faced any heat or drawdown on this position. It was very, very minimal. Only 5 points max and 30 handles. So that's that. Looks like we're about to blow out the high. And we'll toggle back to regular trading hours. We've completely filled in the gap now. I'm going to draw a line there. We'll toggle back to electronic, and then this here is going to be new day opening gap fill. And where is the middle of that? Pretty interesting stuff, huh? Talked about it from here to here to here to here to in here, and then how this could potentially act as reversal to send us, or retracement I should say, back up into the 776s. Pretty cool stuff. That's probably it for me for the day, though. No trades on the personal account. I've already made how much? My goal was $241. It's a 2K account, so I've achieved that. So what I'm going to do is take out the $240. I'm going to buy my dad a flight to come to Miami. I've executed one position on my FTMO and my Darwin X, 0.5 and 1% between the two. So 1.5% on the day. Great trading session so far, so no real need to push it. So I'll keep this open until we blow out this high at 776, and then I think I will end it there, close the charts, and get to work. Let's take a peek at Twitter. All right, so we failed to run the high. What we're likely to do now is trade into this tiny little gap here and then send it higher. So watch this. So we don't, for longs, we don't want to see price close above consequent encroachment, which is this 747. Okay, so there we go. We traded into that. Now we want to see price run for the 776. If we close below 747.50, invalidates what I just mentioned. See how we just closed right above it? Just for clarity, I didn't take this long, but I just wanted to map it out for you guys because it's a likely scenario to send it up into the 776s. If we can retest the top of it, I would be inclined to take it on my personal account, which is over here. All right, watch those 776s. This is another 25 handle run if you were to go long here. Consequent encroachment overlapping with the fair value gap. Now watch the top of this orange one here. Price might want to tap that. If we do that, I'll take the execution here for a 10 handle run or whatever it is. Not really a good risk to reward. Could do a 1-to-1. Risk 76 to mate 76. Yeah. I think I'll just tape read this one. We'll leave it here just to outline that we would be long if it taps it, so we still wouldn't have gotten a fill until it actually taps the top of this. And then we'd be looking for a run on the micro to 777, which here is 776. So far, beautiful run though from consequent encroachment overlapping with the BISI. All right, watch the level here. We're about to tap it. Let's take a look at the S&P and the Dow. Yeah, it looks like we're going to be running the 830 highs, which, yeah, looks like that's where we're heading. Okay, watch. Here we go. Got to tap this level. Boom. All right, so that would be enter the long. And then we're looking for a run from 57 to 77, 20 handles. I'm not willing to execute the position, like I said, because we've already closed new day opening gap, even though I know it's 95% likely to pan out and give us this 20 handle run. I'm already up on the day, and I don't, one loss, even something like this, I'd rather just map it out visually than execute the position because I'm already up on the day. And if I were to take a loss here on my personal account, I know it would definitely affect me psychologically because I'm already up on the week pretty good for the personal account. So there's no reason to give any profits back. All right, watch this. Consequent encroachment of this little BISI now. Price can wick back in here like this, but we don't want to see a close below. So we closed below the fair value gap. So you can see I would have been stopped out on the trade. So that is one of the moments where you appreciate your experience to not execute on an entry prematurely, especially when you're already up on the day. All right, so I'm gonna get rid of this. See if we're gonna retest this and send it higher, or, and one other thing I want to mention. Look how we have held the range, high and lows, and we've just bounced back and forth. Again, we have a speaker at 4 p.m., so we can anticipate and forecast this stuff ahead of time. No need to stress. No need to overtrade on a day like today. So funny to hear when these guys are executing orders. Like they just took a long. It could pop up there, but it's just they take trades I would never take. I'm talking about the TopStep people, FYI. I would enter a long right here. Stop below here. Target here. So Not a good risk to reward, really. Could actually even have your stop at 50%, make it a 1-to-1. You could do that. Got me thinking about it, guys, but can't pull the trigger. It's just too 50-50 for me. Now watch if this sends it higher. See how we close above and then we come back down. I don't like that. It's not indicative of a high probability market. So we've had two examples so far of why I'm more reluctant to push the button now that we're in the 10 a.m. hour, and typically we would be in a high probability time window to operate. But I mean, you can see that we're not getting much. So really the best opportunity in line with my higher time frame bias is the only trade I took, which was here. And if this one comes below here, that means we would have been stopped out on two positions, potentially given back profit and taken two losses on my personal account, which again, from a psychological standpoint, does not feel good. So I'm very happy with not taking the positions. Actually, what I'm going to do is I'm going to initiate a withdrawal right now from my personal account. And I'm going to just secure profits I've already made on the week. So just barely missed the stop. Definitely would not have wanted to go through that heat though, because it could still very well come down and hit it. All right, so withdrawal has been requested. So it's 228 bucks. And again, I am just using that to buy my dad a flight to come out here at the end of October, because if you're not compensating yourself for the work that you do, you don't view it as real. Okay, so just looking back over here, you can see that we would have been stopped on this position as well. So again, very, very thankful that my experience has allowed me to not take these positions that aren't as high probability. So that's it for me for today. I am going to just get rid of some of these levels. I'm going to go ahead and stop the recording here because I am closing the charts for the day. And I'm just going to go on about my day. Again, we've got a Powell speech at 4 p.m. So that is likely when we'll see some explosive movement, most likely some whipsaw action. But hopefully y'all enjoyed this. I'm going to put this on my YouTube, and if you watched it this far, much appreciated. Give it a like, subscribe to the channel if you haven't already, and I will see you guys tomorrow for another session.